Good morning. It is Wednesday, March 7th. It is 7:45 a.m. Eastern Time. Taking a look at the morning charts this morning, we've got a little bit of price action going on. Nothing too drastic. Really, it's kind of just a more or less the market's paused this from yesterday's big move, and everybody's kind of in shock, just seeing how things are going to unfold from there. Overall, we've got the U.S. dollar index. We've had this downtrend in play, and overall, you can see we've come down, had a little pause, came down again, had a little bit of a test of this little breakout level, and then we saw the market work its way lower. Overall, we had another strong bounce up to this level where there was some congestion here, and from there got sharply rejected back down to a double, more or less double bottom, but it was a lower low yet. And then we've had this nice, more or less five-wave advance up into this resistance level. We're still not quite to that level yet. We've got this pretty clear resistance around the 10 level on the US dollar index. And last night we've seen the US dollar pull down, pull back a bit, and now it's just starting to have another push. If it can push up to that 80 level today, and if it gets sharply rejected, similar to what it did last time here, then we'll probably see the equities market and commodities have a little bit of a bounce. We'll see a couple percent bounce in the market, and then we'll see possibly the US dollar pull back into this area. From there, I do feel as though the US dollar is putting in a nice solid base here, and it's very likely that it will head up in the longer run sharply higher, and we'll see a very strong multi-week correction in the market. So that's kind of where we stand right now and what we're kind of waiting for to unfold. Taking a look at the crude oil and how it's affected with the dollar this morning, it's pretty much unaffected. It's trading right down where it was yesterday, just trading sideways. But overall, if you look at the grand scheme of things, we've got a nice advance, nice pullback. There's a three-wave correction here. And now we've got the second half of the move to the upside. So more or less from 105, we've got potential for it to go to about 114. So we've got about a $9 move in crude oil from where we are. A nice kind of halfway point from where it is right now. And that's what we're looking for. And you can see the resistance is simply from back here. So we'll see how things unfold depending how price action in the US dollar moves. We may end up looking to get out a little bit earlier around the 110 area simply because that will be a triple top, and it could be a triple top, and of course the last time I got up there it got rejected back down. So we'll just see how everything is setting up the US dollar index and price volume action on crude oil when it gets up near these levels. And we may just, if we do get up to these levels, we trim some of our profits off because it is going to be a key resistance level. But overall, there's potential for it to still continue to go up another $3 or $4 into key resistance before it probably gets sharply rejected back down. Now looking at gold, gold's been moving lower here the last couple trading sessions, and just looking at this price action, it's starting to look very bottomy. We've got a nice second bounce here. This type of price action usually actually plays out for three, possibly even four bounces. It kind of really drags right out, and we'll see volume kind of dissipate, and maybe right near the end when it's pretty much done we could see some pretty big volume spikes and capitulation selling. But overall, we're starting to see another little bounce here, and if we could get it to really wear down like this into a key support zone, which is some previous congestion here, some pivot highs, some pivot lows, then if we get it down this level, I think it's going to have a very sharp reaction back up to the 1750 area, which will be more or less the midway point through this key congestion back here. And then of course it could go higher, but that's what I'm looking for going forward at this time. Looking at gold stocks, gold mining stocks, they are trading. They gapped down yesterday, sold off, had a little bit of a bounce, and closed up near the highs for the day. But overall, they have broken down below their key support trend line. And right now, it's just a wild card of what they're going to do. That is somewhat of a reversal candle, so the odds are pointing to maybe it comes up, fills this gap, and kisses the market goodbye right here for a test of that breakdown level, which falls in line with my analysis of hopefully we see the equities market put in a 1 or 2 day bounce. Gold stocks will follow suit, and then from there it'll head down and make a new low somewhere down here. Looking at silver, continues to trade under the key resistance level. It's got similar price action to what gold has got going on here, where you get a sharp move down, you get a bounce, new low. What we're looking for is another new low and a bounce. It moved down pretty sharp yesterday down to 3250 area and then putting in a bounce. But overall, looking for a little bit lower prices. We've still got rising volume and lower prices. So sellers are still strong in control with silver. What we want to do is see the market continue to move down, and we want to see volume actually dissipate with it, and usually that'll bleed right down into a key support zone, and eventually it's just a matter of time. Big volume will step in, we'll see the market break out, and we could see silver go right back up to the 34.50-35 area, which will be this key downtrend resistance level, and also this breakout zone where there's lots of volume that was traded that will act as resistance also. Looking at the SP 500, here's the daily chart, kind of zoomed in a little bit. And yesterday you can see here the ratio of selling. We had 25 sellers to every one buyer. That is pretty extreme. That usually puts a short-term bottom in the market. And usually, a lot of times it'll carry over for one more day. We'll see a new low made the day after, and then from there it will have a strong bounce. So what I'm looking for going forward here is looking for a bounce with this a gap fill right here. If we could get a gap fill from yesterday's lows, we're getting about a 1.6% bounce, and with a leveraged ETF, it's about 3% move in our favor. From there, I'm looking more on the bearish side, anticipating lower prices going forward, and we could come down. You can see here a percentage basis on the side, 1, 2, 3%. Possibly even a little bit more. We've got another gap window back here to fill. So we could come down and even dip down a little bit more. Usually with a low volatility level like we are seeing here, we'll see about a 5% correction. So that brings us down right into that gap window and right back down into this key support zone, which is where there's previous congestion prior to the last big gap up. So that's kind of what I'm looking for going forward, and we're just trying to squeeze the market here for the market's been in a strong uptrend. When you get a sell-off like this, usually you'll get buyers still stepping in that have yet to turn bearish. You'll see it recuperate and come back up, fill that gap over the next trading session or two, and then roll over, and everybody's on the short side. We'll be looking to take some type of short position if we get up here, simply because we have broken below the 20-day moving average, which is trading somewhere along this level around here. So we've gapped below it and kind of jumped over it. Gaps kind of work as bridges. They allow you to jump over support or resistance, and now that we've kind of jumped over it, or below it, I guess you could say, now we're going to come up and probably hit our head underneath it and then see the market sell off. Now, just looking at how that looks on a 10-minute chart intraday basis, this is the last 5 trading sessions. What we're looking for here is simply the market to move back up somewhere into this level, which is this gap fill, and then from there we'd be looking for a short position that could last several weeks, and we'd see we'd actually be looking to reload on our volatility VIX play, because when the market comes up here, we're going to see the VIX drop. We would reload some of our position, and then as the market tanks, not only would we be short the market, but we'd be long volatility, which hopefully will shoot through the roof and go to our targets of $29 on the VIX and possibly even higher. Now, looking at the futures chart to show you what's kind of been unfolding this morning. Here is the futures chart. This is the last 4-5 trading sessions. If we just zoom in here, you can see we've got yesterday's price action, which is right here. And yesterday the market closed somewhere right about here for the day. And overnight trading, we've seen it continue to move higher, which is very typical price action after a very strong move from pre-market trading and overnight trading the day before. We saw this huge move to the downside, and then we saw continued bleeding off throughout the session. You can see prices moved lower as volume moved lower, and that's usually a sign that selling is starting to slow. Usually in overnight trading, you'll get a nice bounce, and it'll come up and get to our resistance level, which the key resistance level on our chart for us is right here. The 1360 is my main goal. If we could get there, we'd be out and short for sure. But right now we're only trading a little bit higher this morning, up about 0.5%. really do. If we can get it to extend up to this level, we'll have this big gap fill that is more or less, here is the gap fill, right? Not sure why this indicator won't grab here. This is the gap fill that we had from yesterday. So we really want to kind of come back up and fill most of that gap. That'll give us a 1.6% move in the index, which is a typical move from an oversold situation like this. And then after that, you'll see it head sharply lower. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.